All right, good morning, everybody. How you doing? It's Mark Von Canel and David Bruno of the Von Canel Real Estate Group. Again, in an effort to just keep everybody informed in these challenging times, we're sending out these videos. We've got a special guest today, Michael Houghton with Academy, that'll be speaking about some relevant information when it comes to forbearances and just kind of what's happening in the mortgage department or mortgages right now with everything. One other thing I want to get out of the way on the property management side of this, because we do have a lot of our property owners that are getting this video too, is that there's a push up at the state level, and it's being fought by anti-housing activist Michael Weinstein, who's trying to push this proposal to get the Costa-Hawkins Act that's been there for 20 years, which basically prohibits local governments on regulating price of rents and that good stuff. So there's a push to get that repealed, which would then allow the governments to come in and lower the amount of rent increases that we can do. So again, just another attack on us. It's also going to impact single family homes, condos, and apartments as well. So it's really all the way around that it's just another way as investors here in California, we're constantly under attack. So I'm gonna push this link out to everybody in another email. We'll have it in with this video for you to go to your representatives and talk to them. And again, we just have to unite and take care of that stuff. So that's on the property management side of things. David, what else are we going to talk about today?
Yeah, so two quick things. First thing we're going to talk about, everybody wants to know how the market's doing. And I can let everybody know that over the last 7 days, we analyzed all of the sold properties in Santa Clara County and found that on average, every closed deal was actually 5% above the asking price. So 105% of list price is what we're seeing coming in right now. So to tie into what Mark and I spoke about last week, you know, especially those vacant homes, they're still selling quickly when they're priced right.
You know, it's crazy, David. We just listed that property over on Westdale, which is by Mitty, West San Jose with Cupertino Schools. We listed it on Wednesday last week, and here it is Monday. We have 22 disclosure packets out, and probably going to have 4 to 5 offers on that property. It's you know, it's crazy to see some of these areas. It's almost as if there is no virus effect whatsoever in the housing market. And to hear that we're 5% over list price right now, that's actually an increase from where we were the first or second week after the shelter-in-place order came out. Very, very interesting to see what's happening.
Yeah, absolutely. And Michael can talk a little bit about interest rates. I know I met with a client over the weekend to show them a property, and they were getting quoted on a 10-1 ARM, 2.5% from one of the major retail lenders. So obviously still a lot of great low interest rates out there. And that's one of the reasons why we have Michael Houghton on board today. You know, there's a lot of changes going on in the mortgage marketplace that we'd like Michael to talk about. But one of the things I want to talk about first is forbearances. I read a great article today that said currently there's 3.4 million homeowners that are in forbearance. And so, Michael, I'd like for you to talk a little bit about how that impacts credit, how that impacts the homeowner once the 90-day forbearance is up.
Absolutely. Can you guys hear me? Thanks for having me. But number one,
Got you, Mike.
Pleasure being here. So yeah, let me just start off by saying, first off, the mortgage industry is classified as an essential business. So it's been business as usual. Most strong lenders are set up to handle business as usual. And on the rate perspective, the rates are lower than they've ever been in the history of mortgages. So don't let that slow you down from rates. But one of the key topics that David and Mark wanted to talk about was forbearance, which can really impact you as a borrower and as a seller. So what we're finding out is millions of people have taken the advantage of forbearance. And what that means is they've been allowed to push out payments by as much as 3 months. What we need to be careful is, though, that the term forbearance is used as a struggle financially or needing some help financially, which means if you come to apply for a new application, it's now already showing up on your credit report. It's not going to affect your credit negatively, but it is posted, which is going to flag us as the lenders to have to make sure that you're current on that, because if you're coming to your current loans and asking for relief because of financial issues, obviously getting into a new loan is going to get flagged if you've been flagged for financial issues. So a couple things you want to take a look at that is now going to be mandatory on every situation. If you are in forbearance, it needs to be removed and closed up. and free and clear. So we'll run a credit sup on that. The other thing is if you're a renter or you have renters, we have to see 12 months of current rents and paid in full as well.
Yeah, so Michael, real quick on that. I think a lot of people, when they, these forbearances that are coming out, you got to pay that money up. And I've heard in certain circumstances where sometimes a bank will refinance a loan or push it out. But in other ones, you get a 4-month forbearance on your loan. You got to pay that money back. And I've been hearing that some of them, you got to have a balloon payment at the end of that time period.
That's correct.
So I think that's a lot of where people aren't thinking about it. They want to breathe a little bit, which is rightly so, especially if they've been impacted financially. But that forbearance, really, at some point, it's got to be paid back, right?
That is correct. So there's no standard model. Everybody's doing differently, but they are making you sign documentation. And the majority of the ones that I've seen is they give you the relief for 3 months. But at the end of that 3 months, not only do you need to bring it current of the 3 months past due, but then you continue on your regular payments. So if somebody is struggling, right, it's going to be even harder for them to now pay 4 months on that 4th month due.
Right.
So,
and so let me ask you this, Michael. So here it is, August 1st, I've now got to make 4 months worth of mortgage payments. Now, to this point, it hasn't negatively impacted my credit, but if I'm not able to make those 4 months, that lump sum payment, and then I roll into default, or if the bank tries to throw me another lifeline and says, hey, we'll do a loan modification, what type of impact does that have on your credit report?
Same, great question. Right now, it's not going to negatively impact your credit report. So I think I've sent an example. We'll show that out and send out what it looks like. But it shows agreed on as terms discussed. And then what happens is that will have to be remedied or resolved before we can move into a new loan. The simplest thought process is if you can't be current on your existing loan, that's basically a red flag moving forward that why would you be consistent or ready financially to handle this new loan? So what people have to realize is this mandatory that they report this. So that forbearance is going to be on your credit report for 10 years. It's not going to negatively impact it, but it's going to be on the report for 10 years. And then you will be questioned, for example, what we call an LOE or a letter of explanation. You'll have to write that up for the lender to show that, hey, that was COVID-19. We just needed some relief for 3 months, but we're right back on track.
So Michael, that's very important what you said. So when you, even when you pay it off, say in 3 months in David's example, once you pay it off, it's still going to remain on your credit for 10 years?
That's correct.
Wow.
Everything that's reported on the bureaus is for 10 years. Now, impact-wise, which is the key ingredient, it will not negatively impact you if you resolve it and remedy it and bring it right back to normal once that forbearance is complete.
Right. Awesome. Michael, thanks for sharing and bringing us that update today. David, what else did we want to go over?
I think just the last thing, we want to remind everybody that Mark and I will be hosting our first investor seminar, how to invest throughout the United States during COVID, during shelter in place. So we're rolling that out May 14th. Sometime during the day, we're going to do a Facebook Live, and we'll send that information out to everybody once we have it firmed up.
Awesome. All right. Well, great information, guys. Thank you for being part of this. And to all of our clients, we're here for you during this time. We know life events still happen. People still need to buy and sell. So if you want to consult or just speak real estate, give us a call at any time, you guys. All right. Take care. Michael and David, have a great day.
Thanks, guys.
Thank you, gentlemen.
Bye-bye.
Bye.